So you have some leftover savings and are now wondering how to grow that money through investing. However, every single YouTube tutorial seems to confuse you. For that reason, in today's video, I'm going to break it all down and teach you how to build generational wealth even if you're starting with your first paycheck. Hello everybody, my name is Gerardo Astorga and I aspire to be an investment fund manager. And in today's video, I'm going to be covering very basic topics such as assets and what types of assets there are, where they focus on financial assets as I think they're very crucial and we're not really taught about them despite their importance. Today's video is going to be very basics as I'm going to be basically laying a foundation. Of course, I could go into market analysis, stocks, crypto, etc. But as I just previously mentioned, I really want you to have a foundation so you don't get lost, and of course it's so you can understand financial markets as a whole. My goal with this channel is very simple: financially educate teenagers in a way that actually makes sense and is obviously understandable. So let's start with the very beginning. What is an asset? An asset is something that you own that basically holds value and can help you build wealth in the future. This could be something like a house, possibly a stock, which I'm sure most of y'all have heard about, even cash, and surprisingly a car, which I actually used to think that was a liability because it goes down in value. However, I recently came to learn that it's what it's called a depreciating asset. And basically, if you don't understand, an appreciating asset is something that goes up in value, like a house, which is why, you might see that a house right now is more expensive than a house from last year. There's also stuff like gold, stocks, possibly stocks, right? And a depreciating asset is something that goes down in value. This could be something like a car and clothes and technology, since obviously a phone from 7 years ago is going to be cheaper than right now. We see the importance of assets as obviously businesses use them. We can see machines, buildings, inventories, and money that's still people owe them. All of them helps them generate income. However, for our use case, I like to divide assets into two main categories. Number one, real assets, which we will focus less on, but I do want you to have an understanding of. And number two, financial assets, which are actually, of course, going to be the focus of the channel and the video, of course, because I think they're very important. They're very crucial for us to understand, and they're very accessible for teenagers compared to something like a real asset, which we would have to buy a house. So to start with real assets, think of this like something like physical or productive goods that will obviously make a product. You could think of this like land, buildings, machines, technology, all of this stuff that of course helps create a product. This is actually what makes up the world, obviously, right? An example of this would be like a lemonade stand. Imagine, the stand itself is already a real asset, the lemons, all of the stuff that you have there is probably an asset because it helps you create that product. Now, financial assets are a little bit different. Think of financial assets like a piece of paper that tell you that you're part of something. For example, maybe you give your friend $100 and he gives you 10% of the business. Let's just say this paper is real. Well, this would be what could be considered a financial asset, which would obviously be something like a stock, which I'm sure you've heard of. Another one could be a piece of paper that promises that it's going to pay you back regularly with interest, which if you don't know what interest is, think of interest like I'm going to pay you extra money for lending me money. Like it's like if you lend your friend $100 and he gives you 105. Well, that 5 would be part of the interest, right? In this case, there are certain financial assets or piece of paper that have like a transaction like this, right? The focus of today's video and the channel is actually going to be mostly based on financial assets, as I think they're more accessible to us as teenagers. Another reason is liquidity, which think of liquidity as how easy it is to buy and to sell. Of course, buying a stock and selling a stock, you can do it in a few seconds. However, selling a house is not going to take just only a few seconds. It's going to be possibly a few months or weeks. Similar to a car, right? It's going to be a few weeks. This just shows, the liquidity. There's different liquidity levels at different types of assets, right? This liquidity is what makes financial assets attractive, as you can be more reactive and actually take action to news, how you're feeling, or even emergencies, right? And of course, the best part is how these financial assets are more accessible to us as teenagers, as we don't have to be putting the same amount of money that we would have to put in order to buy a house. We could start with as little as, probably $10, as now we can buy fractional shares. Now I want to cover the main types of financial assets, starting off with the most commonly known equities, or also what's known as stocks. I'm sure most of y'all have heard of stocks. However, I want to obviously cover some misconceptions and just teach you a little bit about them. Well, for those who don't know anything about stocks. So think of stocks like you're buying a piece of a business. It's like owning a piece of Apple, Nike, or Tesla. These pieces are called shares. And basically what they do is represent ownership of a company. Companies sell these shares in order to grow money. Well, for whatever reason they need it. Maybe they want to build a new building. Maybe they want to build a new factory, right? And in order to finance this or in order to purchase this, they need to issue shares, right? Think of it like this. Imagine your friend, which has a pizza stand, now wants to build a building for whatever reason. So since he needs to make a new building, he sells part ownership of his company, or well, through small shares, right? And you actually buy them. Well, now you're part owner of that business and he may be able to expand the business. And if everything goes well and the business, obviously makes more money, your shares are going to go up in value. That increase is called capital gain. It's like saying, oh, I bought a share at $100 and now the share is worth at $150. That $50 that would be a $50 profit or the capital gain. Some companies also, pay back part of the profits to investors, which is what's known as a dividend. And just think of it like this. Imagine a company does very well this month, like your friend that owns a pizza stand, and he decides to, thank you for supporting him, and he just gives you some money back. Now, these were very, simple explanations, about stocks and how you make money through stocks. And changing topics, I really believe that will move stocks expectations. Now, of course, there might be other factors, but in my opinion, those factors only affect expectations, which is what's gonna obviously determine the price of a stock. Basically, the stock market just moves based off of expectations, or that is obviously my personal theory. I think like this because I've seen various examples, such as, for example, Germany being in a recession. However, the DAX still goes up. And there's a lot of other, situations where we see how, theoretically the stock should be going down or up, and the opposite actually happens because of expectations. Of course, there's other underlying factors which I could go more into that, but it's basically just so you have an understanding of how this works, and obviously so you know that emotions are very important in whichever financial markets you're looking at or whatever investment you're looking at. The second type of financial asset are known as bonds, which are also known as fixed income or debt instruments if you want to get like very fancy. Think of it like you're either gonna lend money to the government or to a company, and they're gonna promise to pay you back with interest. So remember our friend that had the pizza stand and he wanted to build a building? Well, he actually has two ways in order to finance this building. Finance just means to pay for it. Like how are you gonna pay for it, right? Or how is he going to get the money in order to pay for it, right? One of the ways is obviously issuing shares or selling shares, right? And this would basically mean that he would give up ownership of his company. Remember the example where I said that, you give him $100 and he gives you 10% of the business? Well, that's 10% that he doesn't have. So maybe he doesn't want to do that. And what he can do is actually issue bonds, which is actually just borrowing money instead of giving ownership. So say he issues a bond and you lend him the money, and it's at a 5% interest rate every year. Let's just say it's $100 again. He would be paying you $5 until the bonds or like it hits maturity, which I'll explain more later. Now he might choose bonds over shares because he doesn't want to give part ownership of his business, or he might choose shares over bonds because he doesn't actually want to owe you money. So there's various reasons why you finance yourself through different things, but that's just like a fun fact that I think y'all should know of, just to have a better understanding actually of the stock, of the financial market. Now, just so you know, the same thing happens with government, and this one's the one that I have like the most fun with explaining, because think of it like this: governments make money through taxes, obviously, and they obviously spend money through hospital, roads, etc. Stuff that we already know. What if I told you that most governments run into what's called a deficit? A deficit means that you spend more than you make. I make $8 and I spend $10. I'm in a $2 deficit, right? And in order to finance this debt, remember what finance means, it's just where do I get the money to pay this? I can issue bonds, which is basically borrowing money from, investors or, just people that want to lend the money. And in order to finance this could be other countries or individuals such as ourselves. And government bonds usually tend to be the most safest ones. Obviously safer than corporate bonds. Corporate bonds are basically the ones that we just explained previously about the pizza stand and all that stuff. Government bonds are the most recognized and the most safest because obviously you're lending money to a government. The most safest ones are United States, right? So yeah, it's basically a brief explanation of bonds. And last but not least, the last financial asset is called a derivative. And the derivative is very complicated and it's actually used a lot by traders. So let me just give a summary of what a derivative is. Imagine a derivative gets its value from somewhere else. You're not actually buying an asset like a stock or, for example, gold. You're trading a contract that follows the price of the asset. Just think of it like this in a very basic example. Imagine you and your friend bet on the price of gold. Like you bet that it's gonna go up and he bets that it's gonna go down. You're not literally buying gold, but let's just say it does go up. Well, you're gonna make money through that, right? Like let's just say you do bet. You didn't literally buy gold, but you kind of did like a contract, right? So it's like a very simple example on, how derivatives work. Big investors and firms use these mostly to manage risk, which it's called hedging. But again, this I will cover later. And speculators or traders or investors use these to speculate or make profit out of them. Even though it's very complicated and it's a subject that I haven't mastered myself, yet I'm very interested in learning. In simple terms, derivatives just mirror a asset. And that's pretty much the most simplest way of explaining this, right? So to conclude, now you know what a real asset is and the financial asset. But I really hope you had a fun time watching this. And then I hope you enjoyed the first video because, of course, I'm barely starting off. And if you have any tips or any questions, please feel free to comment down below. Make sure to like and subscribe. These lessons are very basic and we might not see the importance right now, but I'm gonna start building up onto something and going more in depth into stocks and stuff like that because I know most people are interested in that. But again, I'm building up to that. I just want beginners, like total beginners, to have a very basic understanding of this. Make sure to like and subscribe. Thank you for your time. Have a wonderful day.